Hey guys, how's it going? I want to do a quick video on oil and the Canadian dollar. And you want to look at a few things. Last week, I was talking about how a lot of speculative short positions were coming into the market by hedge funds. While on the other side of the trade, commercial hedgers were buying up the Canadian dollar in large amounts. Commercial hedgers, those that may be involved in selling products to Canada, they want to hedge themselves, or they're selling to other parts where they're dealing with the Canadian currency. So their main job is not to speculate like hedge funds, but just to protect themselves from an adverse move to maybe the downside or the upside based on where they're positioned at. So you want to look at the fact that the Canadian dollar was going down last week for 10 days in a row. Now it looks like it has stabilized, where you haven't seen a move to the downside as aggressive as you saw the 2 weeks before. And what I also talked about, there's a correlation between oil and the Canadian dollar. And what we saw this past week or so, Canadian dollar stabilized, price of oil started to spike back up, RBOB gasoline spiked back up. Well, some people may argue that it had nothing to do with the Canadian currency since it was sideways. And if they want to look at one of the reasons why oil may have gone up is they had a huge short position in oil. A lot of speculative short positions came in, and then some of the inventory reports came out. One of them was better than expected, and as a result, oil prices shot back up, and RBOB gasoline shot back up. And I was looking at the Commitment of Traders report for gasoline and RBOB gasoline and oil, WTI, and you saw a lot of buying for the WTI markets from the commercial hedgers. That's interesting to know. I think they added 76,000 contracts. So that leaves it at a net of negative 339,000 contracts short. Normally when you see commercials when they're like net 200,000 contracts, 250,000 contracts, that may be a signal that oil is bottoming out. On the other hand, RBOB gasoline, the short position by the commercial market actually went down to minus 23,000. The most or the best net position that the commercials have had for the RBOB gasoline is negative 2,000. Now earlier this year, commercials had a net short position of minus 100,000 contracts, and that has gone from negative 100,000 contracts to negative 22,000 contracts. So you could see the change in position sizing by these hedgers. And I saw all these guys on StockTwits, the speculators, they were saying, oh, it's stupid to buy oil, this and that. I mean, these guys are aggressive traders, by the way, but I was just noticing those comments. I'm not as aggressive as those guys. I have a day job, and it's kind of hard following markets. I do try to follow markets at work, but that's not a good idea. But I just can't help it. Trading and investing is my passion. And this is why I do these videos, to reach out to you guys, and then you guys make comments. But going on about oil. Earlier on this year, I was talking about, and I think it may have been December of last year, how the oil speculators, the commercial money was very net short and expected to move to the downside. Where was oil trading? At 51, 52, sometimes $54 a barrel. And then from 54, it went all the way to the flash crash low of 43 something. So that's like, what, $10, $11 move to the downside? Even though most people didn't see that flash crash because that was like 2 a.m. or something like that. Now, I want to speak about the Canadian dollar. The Canadian dollar, in my opinion, is correlated to oil and RBOB gasoline. But there's a caveat. It's not going to happen on a day-to-day basis. Just like you see gold and the yen, they're not correlated on a day-to-day basis. But long-term trends, you could see them being correlated. So the positioning size of the Canadian dollar is really interesting. Right now, I think going back to the mid-90s, this is the largest long position by commercial hedgers in the Canadian dollar. When you see extremes, and there were extremes earlier this year in other currencies like for instance, British pound. You had the largest long position in the British pound. What did you see the pound do? It went from 122 to all the way to 129. And now you're starting to see commercial hedgers starting to unwind their positions, and then look at the price of the British pound. It's been going down against the dollar, ironically. Not ironically, but looking at those movements. And if you want to look at the long position of the Canadian dollar, the short position of the Canadian dollar by speculators, these guys are the most net short ever, based on the data that I'm looking at. I don't know if they traded contracts before the 1990s, but I'm looking at from a 15-20 year perspective. And you have to look at the fact that a lot of these hedge funds' thesis is that Canadian real estate market, especially in Toronto and Vancouver, are going to blow up. It's going to have ramifications in the country, which will lead to a depreciating Canadian dollar. Now, that thesis may be true over the next few years, assuming that growth slows. But as of this moment, looking at the positioning sizes and looking at who's positioned where and who's positioned there, you could conclude, or it's safe to conclude, that this trade is crowded. Now, this trade doesn't have to unwind tomorrow, Sunday night, when the futures open back up, but who knows? It may take a month, 2 months, and these guys who are net short are going to be scrambling to cover. And and that's where you see these price moves up. It may be a headline where Canada retaliates against Trump for the tariffs that Trump is threatening to implement, right? There's been talk of Canada implementing retaliatory tariffs on Oregon, right? Because Canada does business with Oregon, right? So if you see something like that happen, guess what? You could see, who knows, Canadian currency could just go back up. Or what if Trudeau and Trump come up with some sort of deal on NAFTA? Maybe it doesn't have to include Mexico, but who knows? This could be a reason for speculators to get long. You don't know what the story is going to be, but what we do know is the positioning size of it. And I've also told you about my thesis about when the Federal Reserve raises rates, that's usually bearish for the dollar. And looking at all the currency pairs right now, suppose the Federal Reserve raises rate in less than a month, right? June 9th. They're supposed to meet the FOMC, and a lot of people are saying they will based on what the futures market's indicating. So if the Federal Reserve raises rates and you see that mean reversion move in all these currencies, where, not a mean reversion move, but you see the reaction of what happens, you're going to see, in my opinion, Canadian dollar do best out of all the dollar pairs out there. And if you look at some of the other currencies that I've been paying attention to, the New Zealand dollar has been smoked lately. So I wouldn't be surprised if that currency does well when the Federal Reserve raises rates. And the Japanese yen, you're starting to see commercial money start to buy up the yen again. This was as of Tuesday, but we've seen this over and over again. People tend to buy the Japanese yen or commercial hedgers tend to buy Japanese yen when they're about to raise interest rates. So all I'm saying is, just because the commercial money is very net long the Canadian dollar, it may not happen for a month or two. But based on probability, there's a good chance that this will spike back up and will hurt the speculators who are very net short. And I don't know what the headline is going to be, what the news is going to be to make it go up, but I'm fairly confident this will spike back up. And I've noticed all the comments on Twitter saying, oh, Canadian dollar being devalued, Canadian dollar being devalued. So looks like a bottom is close to being in. And the other reason why I say that it may take a month or two is because I remember oil, right? I was talking about this huge short position in oil like 3-4 months ago. And it didn't look like oil was going to go down. And now oil is down. And now I'm seeing people saying like, oh, oil is garbage, short the crap out of it. I'm like, oh, no. And looking at the position size of the Canadian dollar, I'm thinking that oil will shoot back up to $54, $55 a barrel in the next few months. Now we shall see how this goes, but looking at this data, I'm fairly confident this will occur. Just let me know what you guys think, and I'll talk to you guys later. See ya. Bye.